Hey everyone, welcome back to the channel. Today we will discuss a topic that affects many investors and business owners in Singapore: taxes on dividends and capital gains. Whether you're an individual investor or a corporate entity, understanding these tax implications is crucial. First up, let's talk about dividends. In Singapore, dividends are generally not taxed. This is stipulated under Section 13(1)(ZA) of the Income Tax Act. Singapore follows a single-tier corporate tax system, meaning that corporate profits are taxed at the corporate level, and then dividends distributed to shareholders are exempt from further taxation. This exemption applies to one-tier dividends, which are paid out of profits that have already been taxed at the corporate level. Now, what about foreign dividends? According to Section 13(7)(A) of the Income Tax Act, foreign source dividends received in Singapore by resident individuals or companies are also exempt from tax, provided that certain conditions are met. Specifically, the dividends must come from a jurisdiction with a headline tax rate of at least 15% and must be received in Singapore. Now let's move on to capital gains. Singapore does not impose a capital gains tax. This is one of the key features of Singapore's tax system, which makes it attractive for investors. This means that profits from the sale of assets, such as shares or property, are not subject to capital gains tax. But under Section 10(1)(A) of the Income Tax Act, if the gains arise from the carrying on of a trade or business, they may be considered as income and subject to tax. This is particularly relevant for individuals or companies that are involved in frequent trading of assets. The key factor here is the intent and frequency of the transactions. If your activities suggest that you are conducting a trade, the gains may be taxed as income. So what does this mean for you? Well, if you're an investor, the lack of tax on dividends and capital gains can significantly enhance your returns. However, always keep in mind the nature of your transactions and consider seeking professional tax advice to ensure compliance with Singapore's tax laws. To sum up, Singapore's tax-friendly environment for dividends and capital gains makes it an attractive destination for both local and international investors. Dividends are generally tax-exempt under Section 13(1)(ZA) and foreign source dividends under Section 13(7)(A) of the Income Tax Act. And there's no capital gains tax unless your activities are considered trading income under Section 10(1)(A) of the Income Tax Act. That's all for today's video. If you found this information helpful, make sure to like, subscribe, share so that you don't miss any of our future updates. Thanks for watching.